Welcome to the Riskwiser Zone, the show where we dive into the world of finance and help you make informed decisions about your investments. I'm your host, Lewis, and today we're going to talk about the exciting and often volatile world of cryptocurrency trading. As we all know, crypto has been making headlines in recent years, with prices skyrocketing one day and plummeting the next. But despite the risks, many investors are still eager to get in on the action. So, if you're thinking of joining the crypto trading party, what do you need to know? First and foremost, it's essential to understand that crypto trading is a high-risk, high-reward game. Prices can fluctuate wildly, and it's not uncommon for investors to lose significant amounts of money in a short amount of time. However, for those who are willing to take the risk, the potential rewards can be substantial. One of the most critical things to consider when trading crypto is your risk tolerance. How much are you willing to lose? It's crucial to set clear targets and stop-loss orders to limit your exposure to potential losses. Additionally, it's essential to do your research and stay up to date with market trends and news that could impact crypto prices. Another important aspect of crypto trading is taxes. In the US, the IRS treats crypto as property, which means that selling, trading, or using crypto can trigger taxable events. It's crucial to keep accurate records of your transactions and consult with a tax professional if you're unsure about how to report your crypto activities. We'll also be discussing some of the most popular cryptocurrencies, including Bitcoin, Ethereum, and Solana, and exploring the best ways to buy and store them securely. And, of course, we'll be taking a closer look at the current market trends and what they might mean for investors. So, whether you're a seasoned trader or just starting out, this episode is for you. We'll provide you with the information and insights you need to make informed decisions about your crypto investments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're continuing our discussion on the latest developments in the global market. Today, we're focusing on the escalating tensions in the Middle East and their impact on oil prices. As you may be aware, the conflict has led to a significant disruption in oil production and exports from the region. According to recent reports, the Strait of Hormuz, a critical waterway for oil tankers, remains essentially closed due to the ongoing hostilities. This has resulted in a substantial reduction in oil output from major producers such as Iraq and Oman. In fact, Iraq has suspended oil terminal activity following an attack by Iran on 2 tankers, while Oman has temporarily evacuated a key oil export hub at Mina al-Fahal. The Organization of the Petroleum Exporting Countries, OPEC, had initially planned to increase its crude output by 206,000 barrels per day in April. However, given the current circumstances, it's unlikely that this production hike will materialize. The ongoing conflict has also led to a surge in crude supplies being stored on tankers, with approximately 290 million barrels of Russian and Iranian crude currently in floating storage. The U.S. Energy Information Administration (EIA) has reported a rise in crude stockpiles, with an increase of 3.824 million barrels, exceeding expectations. Meanwhile, the number of active U.S. oil rigs has risen by 1 to 412 rigs, still below the record high of 627 rigs reported in December 2022. It's essential to note that the ongoing conflict and resulting disruptions to oil production will likely continue to impact global energy markets. As we move forward, it's crucial to monitor these developments closely and assess their potential risks and opportunities. We'll be keeping a close eye on this situation and providing updates as more information becomes available. For now, let's take a look at the broader implications of these events and how they may shape the future of the global energy landscape. Welcome back to the Riskwiser Zone. As we wrap up today's show, I want to bring to your attention a pressing issue that may affect many of you who are eagerly awaiting your tax refunds. With the tax filing deadline looming, it's essential to be aware of the potential delays and challenges that the IRS is facing this season. Due to staffing shortages, the IRS is expecting some delays in processing tax returns and issuing refunds. The agency has been hindered by a combination of factors, including the government shutdown in late 2025, which limited their ability to hire additional workers during the tax filing season. Furthermore, the implementation of the One Big Beautiful Bill Act has introduced over 100 changes to the tax code, making it more complex for taxpayers to navigate and for the IRS to administer accurately. As a result, many taxpayers may experience longer wait times for their refunds, particularly if they file paper returns or have questions about the new tax changes. The IRS is encouraging filers to submit their returns electronically and opt for direct deposit to receive their refunds faster. However, with the reduction in staff, online tools may be the best bet for tax-related information and support. If you're wondering how to check on the status of your refund, you can use the "Where's My Refund" tool on the IRS website, download the IRS To Go mobile app, or access your individual online account. It's essential to have your Social Security number or tax identification number, the amount of the expected refund, the tax year, and your filing status handy when checking on your refund. While some refunds may be delayed, it's crucial to remember that the IRS still expects most refunds to be issued within 21 days from the date of e-filing. If you have any concerns or questions about your tax return or refund, I recommend exploring the online resources available on the IRS website or seeking guidance from a qualified tax professional. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.